What's up, everyone? In this video, we are going to be talking about the market maker buy models and sell models. As I promised that I'm going to make a video on this thing, and yeah, so I'm actually here explaining these models right here. Okay, so the what are we going to discuss in this video? So the first thing is that what a market maker buy or sell model is, and the second thing is that how we are going to enter uh, in our market maker buy or sell model. Okay, so let's get into the explanation of these models. So we have a look at this sketch right here. So we are gonna have an original consolidation. So price is gonna consolidate, then it's gonna come lower, make another sort of consolidation right here, and then it will go down and it will hit a higher time frame PD array, and then what it's gonna do is that it will make a market structure shift and do a smart money reversal right here, and then continue its bullish order flow. So that's actually a market maker buy model. Okay, so the same will be for a market maker sell model as well. So let me show it to you. So let's say, so this is going to be like our sell model. Okay, so we're going to have original consolidation, then this another accumulation, then price is going to go hit a high time frame PD array, and then we will have that smart money reversal from there, and then price is going to continue going lower. So this is market maker buy model, this is market maker sell model. So let's get into the different scenarios or situations that we might face in a market maker model. Okay, so the first thing is that we will do the smart money reversal right here at a high time frame period, then it's gonna go up after market structure shift. Okay, it will bounce up from like a PD array right here in this leg or from this breaker right here, and then the market is gonna come down and take out that low. Now this is called a low risk buy. Okay, so basically this first buy right here, this when price goes up, this is called the low risk buy. This right here is called the first phase of accumulation, and this right here is called the second phase of accumulation. Okay, and we will call this right here, this is our low risk sell, this is our first phase of distribution, and this is our second phase of distribution. Okay, so in market maker buy model it will be called accumulation, and in a sell model it will be called distribution. So sometimes the market is going to make the market structure shift, then it's going to do this it's low risk buy thing, and then that low will be traded by the market, and then it will continue going higher. Now what is the second situation or scenario that we might face or we might get? It will be when price makes a market structure shift, and then price goes up from the low risk buy, like there's a low risk buy right here, price goes up, then this is our first phase of accumulation, right? This, so the market is going to come down and take out that low in a market maker buy model, and in a sell model it's going to take out that high. Okay, so then market is going to go up and continue higher to take out the original consolidation. Remember, everything that I am talking about the market maker buy models are applicable to the market maker sell models as well. All right, so this is our third situation or scenario that we might face. Okay, so in this case we got the market structure shift as smart money reversal right here, price continues to go higher, this is our low risk buy, this is our first phase of accumulation, and then price is gonna come down, go up, make a short term low right here, and then the market is gonna take out that short term low, and in a sell model it will take out a short term high. Okay, and then market is going to continue higher, taking out the original consolidation. Now I have some examples, so let's get into the examples so that you have a clear understanding of what I'm saying. As you can see right here, this is euro JPY chart 4 hour. This is our original consolidation, this is our distribution, then this is our smart money reversal right here happening at a high time frame PD array. This is our market structure shift, low risk buy right here, and then price goes up, take out this low right here. Remember this scenario, it's it's exact same. Okay, so price takes out this low and then continue going higher to take out the original consolidation. Now let's have a look at this market maker buy model right here. Price is at consolidation, like it made this original consolidation, then this distribution, then here we got the smart money reversal at a high time frame PDRA, and we got this market structure shift. Price continues going higher. Now here you can see that price took out these lows right here. Now it might not be visible to you in the video, but you can check it on your chart. It's just recent price action, you can check it. Price took out this low and then continue going higher, okay, to take out this original consolidation right here. Now I have this one last and final example. So we got this original consolidation right here, and then we got this distribution. We can call this distribution as well, and this as a redistribution. Then we got this high time frame PDRA. Price made a reversal from here, made a market structure shift. Now if you see right here, price took out the low risk buy low, right? So this is our low risk buy low, remember? And the price took it out and then went higher. Then we got our first phase of accumulation right here. Price went up. Then right here you can see that made market took out another low right here and then went back up. Now so if you look at this scenario right here, this is that second phase of accumulation low, right? And market takes it out and goes up, as you can see it right here, and we can see this happening right here as well. So we got this low and the market takes it out. Now uh, so basically the thing is that the market is gonna take out, like most likely, it's not always gonna happen, but most likely it's gonna take out a short-term low or a short-term high in a market maker buy or sell model. Okay, so we are actually gonna utilize that red on the short-term low or red on the short-term high and look for our buys or sells right there. Okay, so now let me get into the uh, entry model right here. So this is our entry model. So we are basically going to use two time frames to enter. So let's say we are having a market maker buy model. So let's say this is a market maker buy model, right? Price is going to make a market structure shift. We have a clear drawn liquidity above, which is going to be our original consolidation, right? Now this is just an entry model, that's why I didn't draw like original consolidation or anything like that. So this is our market structure shift. Price continues to go higher, it takes out a short-term low. Now if I zoom in right here, you will see some sort of price action like this. Okay, you will see this kind of price action in the market when you zoom in. Okay, now let's say we are going to use our time frame alignments for this entry model, right? So here are your time frame alignments, you can have a look at it. It will be at your screen now. So basically let's say this is our 4-hour chart. So we are gonna go into 15-minute chart if we are gonna go into the low time frame. If we are seeing this price action on weekly chart, then we are gonna go into 4-hour chart. So 4-hour will be our low time frame, weekly will be our high time frame. Now you can do uh, you can do this with every time frame. So okay, so if this is monthly, you are going to go into daily. If this is 15 minute, you are going to get into 1 minute. Okay, it's your choice. Now let's say this is our 4-hour chart. So market is continuing to go higher, then it takes out a short-term low right here, and then we will see some sort of price action like this on the 15-minute chart. What we are gonna do is that wait for this short-term low rate. Once price rates that, we are gonna get into the low time frame, which is our 15-minute in this case. Then we will wait for price to make a market structure shift. Now here, uh, it's your own choice. You can enter on the market structure shift like the basic 2022 model right here, or you can wait for this high probability setup. Now in this high probability setup, we actually wait for the market to take out a short term low or a short term high in a bearish case. Okay, so we will wait for price to take out a short term low on the low time frame, and then we will wait for it to form an intermediate term low, which is gonna be this right here. So we got a short term low to the left of it, we got short term low to the right side of it. So this becomes our intermediate term low. We can enter from here, placing our stop loss at the intermediate term low and targeting whatever risk to reward ratio rule you have, or if you want to target your drawn liquidity, which is your original consolidation, but it's on you. It depends on what rules you have. Personally, I like to target 2 hour, and I like to use 15-minute chart and 1 minute chart. Okay, so this is basically what I use, and most of the time I use this entry model. So the charts, the trades that you see are most likely going to be taken with the help of this model. So I'm going to like use this model to get my entry in the market. Let me show you the bearish example. Sorry, the bearish model for this thing. Okay, so this is how it's gonna look like. If we are trying to short the market, we are gonna wait for a short-term high rate, okay, which is right here. We are gonna wait for a shift in market structure, which it does right here. Then we are gonna wait for market to take out a short-term low, a short-term high on the high time frame as well, and we will wait for the formation of an intermediate term high, and then we can enter, placing our stop loss at the intermediate term high. All right, so this is basically the entry model. Now let me actually explain the examples. I have some of the examples which I'm gonna explain to you. Have a look at this chart right here. We got a short term low right here. It's rated, and let's say our drawn liquidity is higher, so we are gonna wait for price. We are gonna get into the low time frame, which is this right here, and we are going to wait for it to make a market structure shift and then take out a short-term low. So if you see right here, market made a market structure shift right here. You can say that like even this is your market structure shift, or you can call this as your market structure shift, right? So then what we are going to do is that we are going to wait for price to take out a short-term low. Okay, so once price takes out a short term low and forms an intermediate term low right here, then you got two choices. You can either enter directly from here in discount and place your stop loss right here, because you are going to anticipate that this is your intermediate term low, or you are going to wait for market to make a confirmed intermediate term low, which in this case it did. So we got a short term low to the right side of it and short term low to the left of it, and intermediate term low in the middle right here. Price goes up, you can either directly enter on the breakup structure right here and place your stop loss at this short term low either, or if it's too close to your entry, then you can use this intermediate term low as your stop loss as well. Personally, when the stop loss is too near to my entry, I will what I'm going to do is that I will use uh, these bodies up the intermediate term low, or I'm going to use the wick of the intermediate term low as my stop loss and target fixed to R. Okay, so as you can see that price actually went up, okay, and it took out this high right here. So remember, you are always going to have a drawn liquidity with this entry model. This is not like a pattern or something. You always have to have like your drawn liquidity. Now let's me get into the next example right here. This is our high time frame chart, which is the 15-minute. Price took out this high right here. Now if you see right here, price made a market structure shift on the low time frame, which is the 1 minute chart. Price took out this short term high, then made a breakup structure. Now here you can do two things. You can enter directly on the breakup structure, place your stop loss right here, or what you can do is that wait for price to uh, get back into uh, this premium and then enter on the short. Now here please ignore this, it's a mistake. This is our dealing range actually from here to here, and our actual our premium is gonna fall somewhere around here, and then you can enter from there, placing your stop loss right here or above here. Like it should be protected. Okay, so depends on your risk to reward ratio and your rules for stop loss placement and TP. You can just enter, but this is just like a way for you to enter. I'm just explaining how you can enter and what's the highest probability setup, or what's the highest probability entry model. Okay, then we got our next example right here. Remember, price is fractal. This is our monthly chart right here. Price took out this high right here and starts to move down aggressively, so this becomes our drawn liquidity. Now if we go into the daily chart, this is that exact high, right? Where is it? This one right here. Price took this out, made a market structure shift right here, and continued with a bearish order flow. Now, if you see right here, price took out this short-term high. Then we draw out our dealing range from this high to this high, because this is our recent impulsive move, and we enter in premium. So as you can see that I entered in premium, targeting with a stop loss at this high, because I expect this to be our intermediate term high. And then you can see that price starts to move lower. Now I only target 2 hours, so I have targeted 2 hour right here as well. Okay, so this is basically all about the market maker buy models and sell models, and how I like to enter in these models. Okay, these are very high probable. Now if you don't know why I'm saying that these are high probable, you can check out my thread on it that I made on Twitter. I will link that down. Now if you have any questions in this model, what you can do is that join my Discord server and ask from me questions directly there. You can ask directly from me in the Discord server. There are other like-minded people like you who are trying to learn ICT concepts, so you can interact with them as well. The link will be given in the description. And that is it for this video, and goodbye.